India Today is now giving you exclusive pictures from inside Nepal's parliament, which was set on fire. See the flames which are still ablaze inside the floor of the house of the parliament building of the parliament complex in Nepal.
Another killer pothole in Karnataka. 40-year-old woman on scooty hits a pothole on a national highway, loses balance and gets run over by a truck. Post-sodomy horror in Tamil Nadu. DMK Neta's aide booked for forcibly sodomizing specially abled boy. Survivor says he was paid 10,000 rupees to withdraw complaint. Kiran Rijiju thanks 10 opposition MPs who cross-voted in vice presidential elections. Congress seeks probe into cross-voting. Vice President Radhakrishnan may take oath as VP on Friday. Legal fight for Sanjay Kapoor's billions. High Court directs wife Priya Kapoor to file Sanjay's assets. High Court also registers plea filed by Karishma's children. We begin this bulletin with big breaking news coming in from France. Bloquons tout, or block everything. That's the name of the protest that is happening all across France today. It was expected to be a huge protest, and it is turning out to be one, as protests have erupted in various cities in France, but precautionary measures were taken and over 200 people were arrested. But the visuals that you are seeing now, these are the visuals of city of Paris, where people have taken to the roads, and France is bracing itself for acts of sabotage. This protest was called Bloquons tout, or block everything. And the idea was to bring the country to a standstill. This is a protest called by the extreme left-leaning people of the country. You see on the streets of Paris, people on the streets there fighting with the security forces. Although right now, almost 80,000 security personnel are stationed all across France, but the expectation is that almost 1 lakh people might get onto the streets of France. Now, joining us now for more on this is India Today Global's Pranay Upadhyay. Pranay, another country, another population disillusioned with their government and sick of the growing economic disparity and social inequality. What is fueling this rage in France?
Largely the financial policies, the fiscal management, and we have seen that, how France had to, the French parliament removed yet another prime minister, like he's the 4th prime minister in last 3 years. So there have been a turbulent politics in France. There has been a history of violent and such protest in France. We have seen a few years ago also when the social policy was changed by the government. People protested it and very violently they protested. And this lockdown protest, or block everything out. This is the name given to this protest. It was well announced. I think the security forces of France were prepared, but still there are clashes, there are scenes, and around 200 people have been rounded out by the security forces there in Paris and other cities of France.
Right. Thank you, Pranay, for all those details. We'll be keeping our eye on that protest. Now, let's go across to Sakshi Batra of Business Today with all the updates of the market in an all-new show. Sakshi, over to you.
Good afternoon and welcome to Market Closing on our brand new collaboration between Business Today and India Today Television. It's been a day packed with action on Dalal Street, from global market cues and policy signals to earnings sector trends, and stock-specific moves. We are here to bring you the full picture of how the markets performed and what it means for your money. So stay tuned as we break down the Sensex, the Nifty, and the stories that are shaping even tomorrow's trade. And don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya giving you the first word on everything that will move the markets. Let's straight away look at how the markets are trading in the last half an hour of trade today. Remember, it's the 6th consecutive day of gains for the Indian stock markets. Look at the Nifty. We are hovering around 24,970 odd levels. There's a 0.4% of an uptick, although we've remained in a narrow band of range right from the morning session. And we have seen a little bit of choppiness across the board. But broad-based rally that has taken place across the board on the Nifty, on the Nifty Bank, and even the broader markets, that is the mid-cap stocks as well as the small-cap stocks truly participating, with both the indices outperforming the Nifty as well. Look at the mid-cap index, that's nearly 1% higher in trade right now. And so are the small-cap indices, 7/10% of a move on the higher side. What's happening on the sectoral front? Again, like yesterday, we have the IT stocks that have taken the lead today. Another 2.6% kind of a move on the IT index today. That's led by a lot of heavyweight stocks like TCS, HCL Technologies, Tech Mahindra, and even Mphasis at large as well. Remember, this IT move was largely led by Mphasis announcing a buyback, the 5th buyback that the company will be announcing along with the earnings as well going forward from here. PSU banks, that's the banks that are owned by the government. Those are the companies that are actually looking good pretty well in trade today. Look at this is the second index that's up by over 2% in trade today. And a lot of stocks from within this basket are also higher in trade. Look at the real estate stocks. That's also buzzing in trade, almost 1% higher in trade for the real estate sector as well. But what's trending down? It's the auto sector. Now, all of you know that from the last 2 weeks, from the time the GST rationalization buzz started, it was the auto stocks and the consumer durable stocks that were consistently moving up. And you are now seeing some profit taking place on the auto stocks. So the top Nifty laggards today are largely from the auto basket. Mahindra and Mahindra, Maruti Suzuki, Bajaj Auto. You also have names like Eicher Motors that are dragging in trade. So all of these stocks that are pulling lower in the amidst all the profit booking that's taking place. Let's welcome our guest on board. Mr. Vineet Bulinchkar is now joining in on the program with us. He's the head of research at Ventura Securities. Warm welcome to you, Vineet. Good to have you with us yet again. Help us understand with your fresh view on the markets. How are you looking at the markets up front?
So, a few things have happened is that, the heavily tariffs, the segments are finding different avenues to reach the markets of the US and also diversification. So, I think in some terms, the worst is done with in these segments. Additionally, Trump wanting to, again, cozy up to India is good news for us because, they need the deal more than us. And also on the tariff, the matter is going to the Supreme Courts in the US. So, there could be a possibility of reversal, but, it's anybody's guess when that will happen. But, all these sum total up to tell you that the worst in terms of the tariff news is done with, and we should be seeing better times going ahead.
Absolutely. So Trump tariffs, that's the clear, focus again, back into focus as well today. Let's start off by talking about all the top news that we are looking at this hour for our viewers. Investor sentiment jumps after US President Trump says trade talks with India are ongoing. Markets extend rally with the Nifty inching higher for the 6th consecutive session, crossing 25,000 mark, and the Sensex gaining over 250 points. Tech stocks are once again leading the rally with Wipro, TCS, HCLTech and Tech Mahindra gaining in trade. Oracle Financial Services jumping 9%, while Persistent Systems, Coforge, Mphasis from the mid-cap IT basket and even LTI Mindtree rising about 4 to 5% in trade. The other sectors apart from IT are the textile spaces that's also been buzzing. Gokaldas Exports, Welspun Living, they're all surging 9% high in trade amid renewed talks between US and India as far as the tariffs are concerned. 3 IPOs have opened in trade today on Dalal Street with a strong start. Urban Company, Dev Accelerator and Shringar House of Mangalsutra fully subscribed on the first day. which raises India's FY26 GDP forecast to 6.9% from 6.5% earlier on strong consumer demand, GST reforms to boost spending, US tariffs likely negotiated lower, and RBI may cut rates later this year. Chief Economic Advisor V. Anantha Nageshwaran says GST reforms will cushion the impact of US tariffs, limiting GDP drag to 0.2 to 0.3% in FY26. Domestic demand boost to offset export slowdown. Vineet, coming back to you, with respect to the entire GST buzz that we had been so far noticing, last couple of sessions we've been looking at all those consumer-oriented sectors, the autos, for instance, the consumer durables, for instance, also see some profit booking in place. How are you looking at this profit booking? Is it only in the interim period and we might see a bounce back again when the GST cuts actually come into force from September 22nd? How would you approach autos and consumer durables for now?
So the GST cuts are all and done with. It's only that, we are currently in the Shraddh period. And during the Shraddh period, not much buying happens. So, all the consumer stocks are just drifting down aimlessly. Yeah. I believe that once the Shraddh period is over and 22nd, the Navratri comes in, we will be punching, very higher. And we expect to see some very strong demand coming in. I believe that, stocks like the distributors, like electronic marts, or you can talk about the manufacturers like Dixon. These are the kind of stocks that are going to see some real fireworks going ahead. Consumption is going to come in with a bang, and, I hope that it makes up for the losses due to the tariffs.
Absolutely. And that's now listening to Chief Economic Advisor V. Anantha Nageshwaran also talking about how GST reforms will not just give more money in the hands of consumers, but it will also act as a cushion to the GDP from the global uncertainties that it has been facing until now. Listen in.
So the GST's contribution is again not just in the direct impact in terms of its purchasing power it places in the hands of the people, by bringing down the prices of goods, which of course the private sector has to pass on. But more importantly, what it does is to provide an antidote to the second and third round uncertainty effects. So net, I think if you take the GST into consideration, the impact of tariffs and the GST, the compensating effects of GST rate reductions and process reform could probably give us a 0.2 to 0.3% on a net basis in terms of drag on the GDP estimates that we have of 6.3 to 6.8 for the current financial year.
Vineet, coming back to you, when we talk about the US tariffs, remember right from April until now, we've been just looking at how markets have been reacting to every talk, every tweet that we've seen from Donald Trump. Of late, we have actually seen some positive, statements coming in from Donald Trump yet again, talking about renewed talks that are taking place, how he's hopeful of negotiations to come through as far as the trade barriers are concerned. We've also seen a reciprocation from Prime Minister Narendra Modi there as well. And as a reaction, we've been seeing IT stocks continue to rally in trade. Remember, right from April, last 4 months, we have actually seen IT space as a big drag onto the markets. But these renewed hopes of more talks taking place and some kind of a sense to prevail from those 50% tariffs that we've been imposed with, it's the IT stocks that are again, looking buoyant at this point in time. What's your approach on the IT sector?
So, this bounce is coming because of a couple of things. One is that, everyone thought that the worst was about to take place. And with Trump coming in saying that, he would like to renegotiate with us, brings a lot of hope. So not only has the sentiment turned around, but, the stocks have, kind of on technical terms formed reasonable bottoms and taken support and moved up. The fact that, the rally has been quite aggressive seems to suggest that an intermediate bottom has been made. And, it should possibly play out until the earnings season is through. So, until the earnings season, we can definitely say that we are out of the woods. But, my view on the IT sector overall is a little somber. So I would want to repair positions in this pullback rally and, allocate money more to the domestic sectors than to the IT.
Okay, but what about the Mphasis buyback? How are you looking at that opportunity? The fifth buyback that the company has announced and the first one in the last 3 years.
Yeah, but it's telling you that they do not have avenues to deploy the money and hence they're doing a buyback. Apart from this technical jump, today you're seeing the stock is also down. So, it's actually telling you that, the street doesn't see this as positively as, being something of a great event. So,
Okay.
I take it with yeah.
Absolutely. So, Vineet, help me understand what about the other sectors? We had been seeing a lot of pain on the textile space, for instance, that had been dragging, because of the 50% tariffs, which virtually makes no trade possible at that kind of a rate for a lot of export-oriented companies like textiles, for that matter. Today, most of these stocks are higher in trade. Look at the Vardhaman textile, almost 9.5% higher. The day's high. You can actually see that spike further moving higher in trade. Look at Arvind, for instance, Welspun Living, Welspun Corp. These all stocks are actually hovering high in trade. Is that also with hopes that, the tariff discussions could bring down tariffs from 50% now?
So, actually, I would like to give a slightly longish answer. What is happening is
Sure.
that, with the challenge, with the tariffs being challenged in the courts, okay, Trump could have used those extra powers of special powers for a particular country of sorts. The fact that he's using it across the board is being termed as illegal. The federal court has already ruled that, and they're going and challenging that in the Supreme Court. So the hope is that this thing will not pass through because it is absolutely arbit the way it is being implemented, and if they have to turn back the tables, then the tariffs will have to be cancelled, and which is going to be very bullish news. And also the fact that India is taking extremely good steps on a war footing to diversify markets, and with Trump coming in to renegotiate, there's a double surprise for the sector in case everything works out, because you not only have reinstated your mother market, but you're also diversified with other markets. So exports could actually come in with a revenge.
Okay, we need to hold that thought there. We are going to be now focusing our attention on the entire consumer demand that the upcoming festive season could really show up in the upcoming months as well. So let's take a look at the festive shopping this season, and the numbers are rather impressive. A local circles report has said that urban India is expected to spend around 2.19 lakh crore rupees in the upcoming festive season. Now, this is because GST rate cuts on essentials, consumer durables, and medicines have actually given a big boost to the consumer sentiment as well. And this year, 37% of the households are focusing on homes, 24% on fashion, and gadgets are also in high demand. Interestingly, while Tier 1 metros lead the way, Tier 2 and Tier 3 cities are also showing strong growth, signaling a pan-India surge in festive spending as well. We are now joined by Sachin Taparia. He's the Chairman and the Chief Executive Officer of Local Circles to share with us what his recent report really tells us about what could be in the offing for the upcoming festive season. Warm welcome to you, Sachin. Good to have you with us. Well, 2.19 lakh crore rupees seems like a big number. Tell us, in comparison to last year, how big a jump do you see in this number?
So, Sakshi, this number was about 1.85 lakh crores if you look at urban India for 2024. And without the GST, reforms, this number would have been around 1.7 to 1.75 lakh crores. But with the GST announcements, I think there is a bit of enthusiasm now in terms of consumers looking at buying that long pending demand or long pending, essential item for, their appliances or their gadget requirements. And hence, this number this year is looking at 2.19 lakh crores. As you said, strong demand for gadgets as well as appliances, home renovation products, and another area where we are seeing a lot of people showing interest, as well as the regular festive things around festive supplies, around groceries, around fashion and beauty. So overall, looks like it's going to be a reasonably strong festive season.
Fantastic. Hold that thought there, Sachin. Let me also, welcome back Vineet on this panel because he's going to be helping us understand as a retail investor how to tap onto this opportunity there. So Vineet, Sachin is of the view that it's going to be consumer durables that are going to be in high demands. Gadgets are going to be in high demand as well. Your home appliances and even your essentials like beauty and lifestyle is also going to be big this festive season. Help us understand which are the top stocks from within this basket that you would look at as opportunities.
So, fashion and beauty, clearly Nykaa comes to mind. We think Nykaa can do really well. If you talk of consumer durables, I said the best way to play consumer durables is to play the, distributors and the manufacturers. Because,
Yes.
there's a lot of competition among the brands. So the distributors are, Aditya Vision in Bihar and Electronic Manufacturing or EMS Hyderabad based. And among the manufacturers, you can look at TG Electric, Amber, and Dixon. So these three are, these are some of the stocks that I would like to recommend to you. As far as the
Fantastic.
autos are concerned, we like Mahindra a lot, and also Maruti.
Okay. Now, Sachin, coming to you, those are the key sectors where you actually believe the demand could actually come in from largely. When we talk about where exactly will people go and shop for these, online versus offline, what are the trends telling you this festive season? Where could maximum demand be coming in from?
So some massive jump there, Sakshi, in regards to online shopping. What we are seeing basically that, for this year, if you look at some of the online numbers, online as a channel, being the preferred channel for shopping, that was the case the case for about 13% households in 2024. That number has jumped to 28%. So that's a sizable jump, 115% essentially from 24 to 25. So that is where, you have 28% of the consumers going. The large majority, if you especially look at all of urban India, especially tier 2, tier 3, their top channel will be, going to stores and markets and local markets, but they'll also be using, online for certain products essentially. So a big jump in terms of overall online penetration essentially, and I think quick commerce is also adding to that.
Yes.
With many of these things, people being able to order online and get it within 10 minutes, especially for last minute supplies and needs. You have a puja going on, you place that last minute order and you get your supplies. I think all in all all of that is adding up to that 28% number.
Okay, fantastic. Vineet, to you, the quick commerce giants that we have listed on the stock markets are Zomato and Swiggy, Eternal and Swiggy, that is. And, of course, we have given to understand that all the e-commerce and e-marketplaces have already started to hire a lot more temporary workforce to cater to this boost in festive demand already. 40 to 60% kind of, a jump in the kind of hirings that they are likely to do for this festive season on the back of GST cuts. Tell me, how are you looking at the benefits for Nykaa? You already mentioned as a beauty e-marketplace is going to definitely benefit. What about Swiggy and Eternal? How are you looking at those?
Well, but we find there is a little more value in Swiggy than in Eternal. Eternal is a little expensive. Of course, it's going to remain expensive considering the kind of heady growth that they have. But Swiggy definitely has got a lot of value at current level.
Okay, Swiggy has a lot more value. Okay, Sachin, help me understand what is the average ticket size that you're expecting from the urban Indians to spend this festive season? Is there a jump on that too?
So there is, Sakshi, in fact, the urban middle class, upper middle class, I should say. These are folks, and the upper class, in terms of spending. This is the audience which is spending more than 20,000 in a festive season. That audience has grown from 26% last year to 37% this year, which is, again, sizable. So a lot of spending happening from this segment of the society, much more than last year. And I think that is what is adding up of, if you look at the 1.85 crore number and the 2.19 lakh crore number, that is what is contributing to that jump essentially. And the top almost stays, similar, which is folks who are spending more than a lakh in the festive season. That stays in single digit, around 4% or so. But it's that upper middle class that, is seeing a massive jump in terms of spending over 20,000, somewhere between 20,000 to a lakh.
Okay, so there you have it. The ticket size is also increasing. Vineet, coming to you, a lot of people also inch up their spending on the bullion, the gold and silver as well. We're already seeing golden gains for the yellow metal, which is at record high level. There's festive demand. There's a global rally that's driving the surge. There are hopes of Federal Reserve rate cuts that are pushing the stock, pushing the gold prices higher. I mean, we are at 1,10,000 rupees already, and there are expectations that this could further inch up by the time we come to a Dhanteras or Diwali at that point in time. How are you looking at gold and silver with respect to how to play that? Should it be via ETFs? Where do you see the demand going? And how do you look at some gems and jewelry stocks like a Titan, for instance, gold financiers like Muthoot and Manappuram Finance?
The entire ecosystem is going to blossom beautifully in the coming days. Globally, the Western world is unsure how they're, going to de-dollarize, how they're going to have a soft landing, because the only way available to them is to inflate away their debt. And that is going to be music for the price of gold. So gold should be inching even higher from here. And up to Dhanteras, I don't see anything kind of, this gravy train flowing down at all.
Absolutely.
So as far as stocks which are concerned, we like Capri Global, which is a incumbent young gun in the gold lending business, doing very well. We also think Muthoot and Manappuram will do well. And whether you should be buying ETFs or you should be buying the silver metal itself or gold as such, is that option is available to you, because Indian ETFs are relatively safe. There is no issues around them. You can even go and buy sovereign gold bonds where you get 2% interest, from the listed markets.
Fantastic. So those are the opportunities that one can actually explore when you want to look at gold and silver this festive season as well. Sachin, coming back to you, in your survey, what are the other key takeaways that one should draw from this festive season, apart from the ones that we've discussed?
So another big trend is that of digital payments, Sakshi, where a lot of folks who are making these purchases online, they want to use digital payments as the mode of payment. That's another key takeaway. Another one is on when people shop online, they want the returns and refunds to work smoothly. That has been an area of concern over the last couple of festive seasons. So people expect, whether it's e-commerce platforms or quick commerce platforms, they streamlining how returns and refunds are processed in an efficient way. They are done in a transparent way. So that way, it's a hassle-free purchase scenario and shopping scenario during the festive season.
Fantastic, Sachin. Thanks a lot for being with us, Sachin, to share with us all of those details from your recent survey. Looking forward to the festive season and the bumper demand that GST rationalization is going to give the economy also a boost as well. Thank you so much, Sachin. Good to have you with us. Vineet, stay on with us. We'll just quickly check the markets as they, close the day, and of course come to you with an outlook as well. 24,974 is where the Nifty is trading at. It's 107 point of a bump up that we're looking at on the Nifty as well at this point. Let's look at the key contributors here. The top movers include BEL, that's Bharat Electronics, about 4.5% higher, 388. After a long haul, you're actually looking at this defense maker. Also moving up in tandem, you have Wipro, HCLTech from the IT pack. Then you also have HDFC Life Insurance, Bajaj Finance also, that's ticking higher in trade among the top movers on the Nifty. On the downside, I've already marked out most of the stocks are from the auto pack, seeing some profits being taken off. And Ultratech cement as well. That's seeing some profits being taken off as well. Let's look at the PSU banks where the momentum is. The index is up by about 2% in trade, and of course largely led by Bank of India, Union Bank, Indian Bank, Bank of Maharashtra, Punjab and Sindh Bank. These are all the banking counters that are hovering higher. Mid caps and small caps are also buzzing in trade. From the Nifty 500 basket, look at some names that have rallied in double digits. Indocount 20% higher in trade. Coastal Corporation is up by about 20% as well. Look at even Avanti Feeds, Apex Foods. Remember, all these shrimp exporters are actually up in trade on the back of European Union approving over 100 Indian companies for exports to the EU, and therefore you are seeing a clear bump up that's happening across the space. Prostam Infosystems, one of the recently listed stocks, also up by about 8.5% as well. Welspun Living, we've already marked out the textile names that are clearly buzzing in trade. Coming back to Vineet, that's where the markets have ended at 24,979. We have the sixth consecutive day of moves, but tomorrow is where the Sensex will expire as well. And we've been seeing this session as a sandwich between two expiries has continued to move up on the positive ground as well. Vineet, apart from the sectors that we've discussed, where else do you find opportunities for investors in the coming weeks?
I think, you should focus on these sectors only. Consumer durables, consumer finance, banking. I think the domestic banks will also do very well because, when you have good news on the tariff front, it means that their credit and their NPAs are not going to be adding up. So Canara Bank, SBI look very positive. Additionally, people forget that, the insurance stocks are going to really have a dream run because, when you cut back on the GST, you're going to keep the amount same when you pay your insurance. So it means that the average insurance premium is going to be higher and it's going to be quite a jump on a YOY basis going ahead. So we like this space also. And, with the FI stop selling in the Indian markets, we've seen positive numbers come in previous day. So that will add to the glitter around the, the AMC stocks also.
Okay. Vineet, I thought that you'd also mark out for us the primary market space, but I'm going to point that out to you. 3 IPOs that have opened today. It's actually turned out to be a wild Wednesday of sorts. Indians have poured 2,700 crore rupees in just 4 hours in a never-ending appetite for the IPOs. It's Urban Company, one of those companies that we are very used to in the urban areas to use formalized home services now. That came up with the IPO. And we also have seen, Shringhar Mangalsutra IPO getting fully subscribed. We've also seen Devex from the office space, company space as well, also getting fully subscribed into focus. Already this year so far, 60,000 crore rupees of fundraising has happened through the IPOs, and the markets seem that there is no lack of appetite from the investor side. In trade today also for Urban Company, which is the largest tech-enabled home services marketplace, has received over 20.4 crore shares in bids as against 10.7 crores that were offered. That is 1.9 times more than the offer size. When we look at Dave Accelerator, that's even seen a stronger response of 3.5 times the issue size getting subscribed. How are you looking at the IPO space and how investors are feeling that there is no lack of liquidity there to keep on pouring for as many IPOs as there are coming in? And any suggestion on these 3 IPOs that have come up?
I think Urban Company is going to have a stellar listing. We think that there's a lot of mood left on the table for investors. So it is going to have a very good listing. Even the accelerator is going to do well. So these two are the 2 stocks that I think will do very well from the IPO space. As far as the future IPO space are concerned, it's going to be raining IPOs endlessly. Just like our rainy season has been endless. The IPO rain is also going to be endless as more companies tap Indian markets and domestic investors have really wanting to spend that.
Absolutely. Well, Vineet, thank you so much then for being with us on the show. It's always a pleasure to seek all those wonderful insights for all our viewers of India Today from you as well. And with that, viewers, that's a wrap on Business Today's show. Don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya, giving you the first word on everything that will move the markets.
Ladies and gentlemen, it's a fine day as far as the Dalal Street is concerned. Strong gains on major indices like the Nifty, the Bank Nifty, in particular the IT index, and of course across the board rallies in many stocks. The reason is fairly simple and not far to guess. There is considerable thaw in the India-US